just start recording and let's get started. So good afternoon and welcome everybody to today's live trading London to New York crossover with the Harmonic Scanner. And I'm just going to start sharing screen and let's start taking a look at some of the pairs. So first of all, when we start trading, we always look at the Forex news, which I haven't had a chance to look at this morning because of coronavirus. I'm here in France. My business here, my bricks and mortar business, which is tourism and hospitality with letting apartments, has been compulsorily shut down. So I've got paperwork to do, and same things happening in the UK, trying to get supplies in and sort out various bureaucratic things. Okay, so Thursday 19th of March, we've had some Australian news, Australian dollar and Swiss franc, so that's all fine, we're in the clear with that. And then if you are on the 7-day free trial, you won't have access to this, but you will have access to, let me just go to the Financial Freedom Group. So this is the group that you're in for the 7-day free trial. And then once you join us, you'll come over to our members group with a lot of very good units. So have a look in the units section here. You can get basic information, the lot sizes for trades, how to place a trade, a guide to TradingView, which is where we put our charts, and 3 simple steps on strategy. So some really good free useful information on the basics that we've learnt over the years. And then once you're a member, you'll come into the Ninja Forex Trader Group, very well organized. We've been at it several years. We could not improve upon the trading anymore. Absolutely fabulous. And then watch in the announcements, go to the announcements first. Watch Paul's introduction. Us live traders, we put our live trades in the watch list. Here's the introduction, and then go through the units. And then as a member, you will have access to our Ninja Trade Hub, which is down here. Hasn't activated yet. 290 pip drop, a new low. Did Euro AUD activate? People posting charts and pictures. So very much as a team, we learn together, trade together, and win together. So fabulous resources. Couldn't have got where I've got today with my trading over the last 2 years. I'm into my 3rd year now without this wonderful group. In addition to this, once you're a member, you will have access to, and this has all been revamped this year. So again, when I first joined, we did have a lot of live educators, but we didn't have all this beautiful new website with so much information on academies and libraries, how to get started in academies. The first thing you want to do when you join is choose your language. Obviously, we're going to the FRX, the Forex Academy, trading in English. And I mean, everything with coronavirus, you know, we've seen a huge drops on the Dow Jones, the biggest moves of all time. But at the end of the day, people will still trade currencies, even if the stock market, I mean, the Philippine stock market's very small. That's closed down. I don't know if it's reopened, but it closed down because of coronavirus. So stock exchanges being affected. And Bitcoin, I see, has gone up 9% today. That was definitely on sale. And obviously, I can't make personal recommendations for you to make your own decisions, but it is certainly a buy between $4,700 and $5,100. It had been up at about 9.5. Quite a few people cashed in at that level. And it could be, and again, you know, disclaimer, do your own research, but it could be up to 100,000 by the year end. And some people have even said over a period of time, it will go to 400,000. So what we're seeing in the economy as a direct result of coronavirus, huge cultural shifts taking place. This is not the end of it, even after I'm on home confinement, as is everybody else in France. Deserted streets, gendarmes and police stopping everyone, looking at their paperwork, and the fine has now gone up to 135 euros. And if you don't pay it within a certain number of days, it's something like 375 euros. So taking it very, very seriously. But the knock-on effect is structural changes in culture and the way we go to school, the way we work, how we work online, how businesses operate, and actually what happens to fiat, traditional currencies. So not by any means have we seen the end of this, even when the coronavirus itself peaks as a pandemic. So back to Forex, when we come in here, we go into strategies, and the whole of my trading is based on the Harmonic Scanner. It's a free tool with your basic package. I do recommend to my new team members that you add on Vibrata, which is an extra 21.75, 21.71, something like that, with taxes, because that spits out a lot of trades a day, something like up to 80. And Steve Hooley, the programmer, the inventor of it was called Web Analyzer, he's put in artificial intelligence now, which makes assumptions on what's happened in the history of the pair, and then makes assumptions on what's going to happen in the future. And I was talking to one of my fellow team traders the other day who uses this a lot and has tested it, and he said it's highly accurate. So fabulous for looking at I don't subscribe to it myself, so I can't show it to you, but you look at, in green or red, the recommendation for getting in at a certain price, and then draw your lines, your confirmations, and get in the trade. And you can do that live when you're on with David in the morning, or David at 8 UK time, Paul at 9. I do Harmonic Scanner with pitchforks, and I can teach you 25 to life and BYOB, but I just do naked charts. I don't take signals. And this is because I've been trading now into my 3rd year, and I've learnt a certain system, and I just stick with that for my main account. Because once you've got something down, why would you want to change? I don't want to change from that because it's working for me so well. So I go to the harmonics, and a lot of us use the harmonics. The 25 to life is a brilliant strategy, and that is based off the D point of the harmonics. Now, what is the D point? Well, if you look at this 5-point scan, X, A, B, C, D, and you look at the pattern of price, this is an M15. I'll just go to the hourly because that's what I use mostly. We'll have a look at some new. I haven't had a look today to see if there's anything new. So we've got a new Traders Way as the main feed. Here's a new scan. If you physically look at price moving along, you're simply looking for the highs and lows in the market, and you're taking a trade off the reversal point in the market. Now, I don't use RSI as a confirmation, it just happens to be up on the scanner, but you can perhaps see it more clearly if you look down at this blue line here. So you can see this is how you would draw the scan. There's a high, there's a low there, but it's taking it down to that A point. I don't know how they work out the maths of this, and it takes a long time and it's very complicated. All we need to know is that it is highly accurate. So it's got an A point at the low point down there, and then the B point is that one up here, the C point is there, and the D point is there. So you're simply looking for highs and lows in the marketplace. The D at the top for a sell scan, and the D will be at the bottom for a buy scan. And then you can take the D point trade, as we call it, which is this trade. The Harmonic Scanner actually gives you the trade. And if we look back at an old one, you can see that in fact that only went up to take profit 1. Bit crazy times in the market because of coronavirus. It went up to take profit 1. Most of them do go through to take profit 2 at least, but in fact it's dropped, and that's on the Euro USD. Oh yes, so I was looking, you can see that on my chart over here. There's the D point. So I was waiting for it to come up to this white line. That's the pitchfork, and I've marked the entry there. This is showing you on the 1-minute chart, but in fact, although it did, you actually would have got some pips there. Well, I don't know if I would have done, because I didn't take this because I've been watching it go down. But you've got a break and a retest of this pitchfork, this line here, which is simply a trend line, a line of support and resistance, and it actually went up. It went up 65 pips. but by the time it had broken and retested, because I always wait for the break and the retest, generally speaking, no retest, no entry is what Christopher Derrick always says. So there was the break and the retest. So if you did get in there, you were going straight up. That might have been news, but you've got a momentum trade there, and you can see on the 1 minute as quickly as it's gone up. This is the danger. If you're in a trade and you decide to take it, and it goes straight up or down, that's that momentum, it can equally go down or reverse on you as quickly. So this is a prime example where you should secure the bag, take your money as soon as it's finished shooting up, close the trade. There'll be plenty of other trades, because if it's shot up like that, and as you can see on the 1 minute chart, it's going to shoot down just as quickly. So what time was that? That was midnight my time, so that's close of market, 11 p.m. UK time. So again, that's another little tip for you. Number one, on the hour, you will get these sort of fake out big moves. Price obviously wanted to go down, carry its downward curve, but it was closing on the hour, and the markets were closing as well. So it took that opportunity to do that. So I would most certainly not have been in a trade on Euro USD at that time of day. Dead zone, you can see in the black, there's the close of the market, dead zone, which sort of Sydney time. I don't take trades at all, and I don't do Asian, but there's your open of Tokyo, the green bar. So there's the break and the retest, and then this is all Tokyo session. And I just want to see how many pips, although it's not normal market. So this is another tip for you. When you look at your hot pairs, so Euro is a currency with Great British Pound, GBP, and CHF, Swiss franc, which will make their moves in London session. Now, Euro USD may well also make moves in New York session, because it's a USD currency, which is a hot pair with a Canadian dollar for the New York session. So when you're looking at patterns, I do back testing using this PCFX trading sessions to show me the bars, and I put each session in a different color, which you can see on the just give it a moment to load up. See on the settings here. So I have I don't bother with Sydney. So I have Tokyo in green, London in yellow, New York in blue. And when I backtest, I put it on the hourly, and I draw vertical lines, or sometimes do it on the minute one, but you can't go back very far. So I draw, there's your vertical line for the Open of London, and I'll go back 10 sessions per currency pair and mark a vertical line to see what time of day, on average, a particular pair made its move. So that made its move there between Open of London and 8:15, 8 o'clock to 8:15, in 15 minutes. And I know these are crazy times. It went over 100 pips, 116, 117 pips on that currency pair. So not usual times. In fact, I've got it slightly, moved slightly earlier, but you get the general point. So in normal market conditions, if ever we return to those, look, this is a very useful way of back testing. So take 10 days sessions, mark the currency pair that you want to look at with blue vertical lines, and write down what time of day it made its move, and you will see a pattern emerge. So it doesn't mean you can't trade at any time of day, but it means you'll get the decent drop that you want to get. So you can see here it shot straight down through quarter theory, and what I haven't got switched on is my 15-minute and 1-minute EMA. Let's see when it crossed. So here is your entry on this pair. 15 minutes and 1 minute EMA. 15 minutes and 1 minute EMA. So here is your entry on this pair. 15 minutes and 1 minute EMA. 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 15 min where the, so I look for my confirmations. So I haven't got a break and a retest. Yes, I have. I've got a break and a retest of the pitchfork there. Is that 10 pips to show me it's solidified? Yes, it is. That was 37 pips. So break and a retest there. Then it stayed above the 62, which is the 1 minute 1 minute chart showing 62 days of moving average of price. So think of your 62. Some of you may be using the 50. Think of it as a rolling line of support and resistance, a rolling line of floor or ceiling. So price above the 62 means generally it's still in buy mode. As soon as it dropped under, I'm looking to get in that trade. Have I got my 3 confirmations? It's under the 62. You can see it stays all the way under the 62 till it's down here. And as soon as that 62 crosses the 15-minute one, because the 1 minute one will happen first, what happens in the 1 minute in trading in a chart will happen across the other time frames as it fans out to the 15-minute and the hour and the 4-hourly and the daily, etc. So I've got a break and a retest, number 1, the 62 crossing the 15, number 2 confirmation, and then there it is coming under quarter theory. So my 2 confirmations would have been those. Now normally I need 3 confirmations, which would be a I could put a fib on it, but I've got enough there. So I've got a break and a retest of the quarter theory up there, actually above the pitchfork. So there's my 3rd confirmation. So that's 1, 2, and then the crossing over gives me 3. So if I'd gotten at that point, let me just put a short position for a sell. So I would get in where I see it cross, and I might have stayed to be safe. I might not have got in. I probably, because I'm quite a cautious trader, probably would not have got in until it was under quarter theory. And then, I'm sorry about these vertical orange lines. It's when trading view glitches. That's nothing to do with me. Let me just see. I know it looks a bit, quite a lot of stuff on here. I can take these off. Let's see if I can just tidy it up a little bit. So, right. So, move that out your way so you can see a bit more clearly. And let me put the settings on. So, quarter theory is at 109. So just as it comes underneath that, not on it, but as it comes underneath that, normally I'd have my profit level at 20 and my stop loss at 10. I'm putting in 200 and 100 because that's pipettes. So you've got decimal point 1 to the right. So that makes it 20 pips to 10 pips stop loss, which is a 1 to 2 risk to reward, which is what I like to work off as a basis. So, but actually what you would have got on that, if I move it down, is that's your first line at 44 pips. There's that level at that pitchfork. If you didn't get out at the 20 or you had exit manager on, see where it's stalling? Just stall, it goes right down, it comes back up to there. I won't do this today, but I'll show you how to start to move your stop loss down to stop profit, because we haven't been through that level of detail. So at this point, you can see it's dropped straight down. You could have taken your money there on that first drop because you can see it's hitting a pitchfork, and that would have been 41, say 40 pips. And down to the pitchfork is 50 pips because it's 50 pips between each of those orange dotted lines. So if you didn't get out there on that first drop, price would have retraced on you. You would have lost, that's 21, you would have lost 20 pips back to there, 20 pips of your money or your hard work on the market going back in. But because we know price moves between levels, it has dropped quite sharply on the momentum. So you're thinking, oh gosh, is it going to reverse all the way back up? But you can see how strong the downward momentum is on that orange line and the gap between that and price. So it's in a strong momentum trade. So if you let it reverse on you and keep your stop loss, which you've now will have moved to stop profit, behind the 62, giving it enough room to breathe. So look to the left, the previous areas of support and resistance. So you have your stop loss somewhere up here. You would have been fine. Gradually moving it down to stop profit. So if you do get stopped out, you've not lost money. So you would have, if you let it reverse on you there and then wait for the next drop. Can you see how it's stalling out on that pitchfork? That is your second indication you might have wanted to have got out of that trade at that 44 pips, where it's stalling out on that unbroken white line. If you didn't get out there, and remember to keep an eye on the time, you'll get it. That's the 15-minute candle. So sometimes I'll go and look at how the 15-minute candle is closing. You can see at the bottom of my screen it says 0914. So if I didn't get out there, then I would be thinking, always when you get into a trade, think about where you're going to get out of the trade. So my next thinking is as it hits the 50 pips on that quarter theory, I don't be greedy, because even in this market, 50 pips on a 10 pip stop loss is a risk to reward ratio of 1 to 5. I mean, my God, that is pretty good going on your account. So you could close your trade, because remember, there's always another entry. So 50 pips there. I don't think I would have been in this trade after that. I really don't. I don't think I would have had the nerve to have stayed in, because I would have got down to that level. If you did stay in, then it went down to 95 pips, this area here. And then you can see, if you hadn't got out, you thought, oh, maybe I'll keep in it down to this next quarter theory at 100. Well, if you didn't get out at this point here, the pitchfork. So say I hadn't got out where it stalled out on the quarter theory, and then you can see it shoots down to that pitchfork there, which is 65 pips, 64.7, 65. Because that's the outer line. Those two white lines are the outer lines of the extensions on the pitchfork. I definitely would have been out at that point, but I know from my trading experience, I most definitely would have been out of the trade at this point, most definitely. Because if you hadn't, look what happened. It went straight back up, virtually. Hang on. Oh, I can never get rid of the brush marks. So now this is a little quirk. I hope this gives you great hope with your trading, because I'm one of the most untechnical people I know. So I can never get rid of the brush mark. If you hadn't got out at that point, look what happened. Remember, I'm on the 1 minute chart here. It went straight back up to 10 pips. How unhappy would that have made you? And then you've got all that agony of thinking, because you probably would have been stopped out at the stage, because you would have moved your stop loss to stop profit at around this level anyway. You can see, look left, you can see how it fits with, where's it gone? You can see how it fits with that level of support and resistance there. Look left, look how it lines up with this level of support and resistance. So my stop profit would have been somewhere around there anyway, would have been stopped out at 10 pips when you could have had 44, 50 pips maximum. So how unhappy would you have been? So by this time, if you hadn't got stopped out, you're thinking, oh, well, shall I stay in it? Because I could still see, now it's above the 62, but I can still see it stalled out. And we are at, where's the half-hour candle? So the half-hour candle closed right up, back up there. But it comes down again. But, and you know, you should have sensibly have been out of that trade, and then wait for it to come back down, because here's another entry on it. It comes down to the 62. It breaks and retests that pitchfork by 26 pips. It stays under the 62. It breaks quarter theory, which is another confirmation. So I've got a break and a retest of quarter theory. I've got a break and a retest of the pitchfork, and I've got a break and a retest there. And also, you can put your, I mean, you can see it quite clearly. Here's your trend. There's your trend line on the 1 minute. And I do always draw trend lines before I'm getting into a trade. So there's your trend line. Sorry, it's just a bit slow because of Zoom. How many touches have you got? It's just gone through it a little bit there. That's your break and your retest, and on quarter theory. So here's your next entry level here. My only problem with this is the whole of this zone is outside of a scan for me. So I probably would not have re-entered this particular trade unless, because I know with some of them I shut down quite a lot. I've only got one, oh no, fib retracement. Actually, that can go. Here's some that are hidden. I can't remember if I've got any scans down at this level. I had them hidden when I draw them up at the beginning of each trading week and put them on my group. No, don't need that. Just bear with me. I don't know why I've got this old one. So I think I was looking at highs over the 52 weeks. I can't remember what, I wasn't using them anymore anyway. Tidy that up. And I haven't got any more that are hidden. So I'm right outside my my scans. I haven't got any scans. I haven't looked on the scanner to see if there's a new one to draw. But here it's coming into the new scan that not a new one, the next scan that I have. So you can see, so I would have seen that there was a gap there and that it could come down to that scan, but normally I will 100% actually, I'll only take trades once they're in a scan. So unless I've drawn a second pitchfork to catch price in this area, I personally would not have been in this trade on the style of trading that I use. But you can see it's stalled and rejected. You've got the break and the retest. You've got the 3 confirmations and under the 62. So you could have got in probably at that level where it comes down, it doesn't reject off that pitchfork. So down there to that level, which is your quarter theory here, there's 37 pips. Then it stalls out. This is on the hour 11. So look at what's happening on the hour. Stays under the 62. So you've got another 50 pips, and look how it respects quarter theory perfectly. And then comes down. So, you know, you wouldn't have wanted to have been in this bit here because that's only 14 pips between quarter theory and the outer fibonacci, the outer extensions of this next scan. So not a lot of room to maneuver on price. And then it breaks and retests this 1 minute trend. This is a perfect entry here. Like that. Lovely entry. I like it when I can see the chart like this for an entry. So just take off that one just to clean it up a bit. Because here I've got it, I really like this to show you an example. So this shows you very clearly, I've got, this is a channel touch, a trend line is a channel touch. So if I clone that, the market is always forming new channels. So there's a channel touch. You want at least 3 touches on your candles. There's 1, 2, 3, 4, 5. So there's the channel. It breaks the channel. It's forming a new one there. I haven't quite got that on. Settings. Let me see if I've. can tidy that up a bit. It's just there. So look at all those touches. 1, 2, 3, 4, 5, 6 touches. 7, 8, 9. And then what price is doing here is it is coming above the 62, this orange line here, and it's breaking and retesting. It's breaking and retesting that. It's broken and retesting quarter theory and the 1 minute trend as well. So that's showing me perfectly that the trend has reversed. And whilst it stays above the 62, you're good to go for a trade. So I would have got in here, put a long position on, long for a buy, and I would have got in exactly where it comes above, breaks and retests here. So to be safe, I would have got in here, and there's a target of up to, I would have stayed in this. There it wicks up, so not a lot of real volume, just those nasty wicks we've been seeing a lot of. I would have always, when you get into a trade, think about where you're going to get out of it. As soon as it did that, and that is at 12, that's at coming up to 5 to the hour. And remember what I've said about when you're in a trade or think of getting into a trade, the last 10 minutes before the hour, it'll do fake outs. So there's your fake out with that wick, and then it drops down back to quarter theory. So I would have been, as soon as it did that and it's on the hour, I'm thinking, am I going to get out of this trade? Because by that point, if I've got in this candle here, which is, oh, that was 10 to the hour. So not my favorite time to be getting into a trade, but in this instance, I probably would have got into it because I like that setup so much. So that would be, done it again. Sorry, it's the only way. I must stop apologizing for this, because if you follow me regularly, it happens to me all the time. One day I'll learn on Ask Brian on his Q&A on a Monday night. So I would have been up, oh my God, I would have been out of that trade 80 pips. And I would have had, where would I have put my stop loss? Because people often ask me that, where do I put my stop loss? So I've got in here, I've covered the 62, I've covered quarter theory. I haven't quite covered 10 pips. I haven't quite covered, usually I like to have a trend line. I like to have my 3 confirmations sitting between entry price and my stop loss. So I haven't got the, ideally I would have liked my stop loss down here at 20 odd pips, but I don't work to that. So you could have done that, but I probably would have kept it to the 10. I'm pretty sure I would have. So I definitely would have got out there, because look what happens as soon as the hours pass, it reverses on you very quickly. Remember, I'm on the 1 minute chart, over 40 pips. It then goes back up, so you're thinking, oh good, that's all right, you know, I'm in a buy. You know, it's rejected off quarter theory, stalled out of quarter theory, slips back through, stalls out on it again. Still quite a gap between price and the 62, comes up above. So you would have had to have, if you were still thinking after 80 pips, I call that very greedy, by the way. And here's your next quarter theory. If you're still thinking, oh, maybe it's still going to carry on up, look how the 62 started to level off. And it's got 3 barriers to get back up. You know, it's got both those white lines and quarter theory, and the 15-minute is above it. So I'll just get the measurement tool again. So now you've stayed in this trade because you're being greedy after 80 whole pips. That is another 32 minutes of your time. Then it drops back down, and now you're stuck back at quarter theory, and that's another 45 minutes when you could have been on to doing something else and had 80 pips. And that 80 pips was a risk to reward ratio on your growth on your account of over 7 to 1. So that's how I look at trades. And we'll go back and look and see if we've got anything on the Harmonic Scanner to look at now. And if there are any questions, please, I hope that was useful. Please feel free to ask.
That was really interesting. Thank you, Sarah.
Yeah, I've got more of that, where that came from. I've been a bit discombobulated, to use a British word, this week, because I'm absolutely fine, but with the government compulsorily, whatever the word is, I couldn't even spell that this morning.
No, not me.
Shut my business. And we're all on lockdown, so I'm obsessed with food shopping. I now can't fit anything else in the freezer. And I went out again this morning, and then I've got paperwork to do because the government will let us claim certain monies, and then you have to write to all the utilities and say what's happening. You know what I mean? And with the French, you just got, and I've got to do it all in French, which means good old whatever it's called, Babel or Google Translator. So I haven't actually had a lot of time for trading, to be honest, and I know how big it's been moving. So yeah, I like, you know, I love explaining that kind of setup, because it just, you know, it really makes sense, doesn't it? Once you look at the time and just sort of see what the market's doing at a certain time. So let's just go. Thank you for that.
You did talk about your checklist, Sarah. Would you be happy to share it?
Oh yes, I have got a checklist. It's let me just see where it is. Trade sheet here. So I think the reason I haven't been sharing it is simply because it's an old one, and I haven't got I've got one with where we've put the exits on it. This is just the entries, so I'll find the new one. And basically the only difference is on the exits is that we add on the hull indicator, because that's what we use for exits. So you must have a pitchfork touch. That's why it's along every trade. And then you want 2 of any of these, which is either quarter theory, the 62 EMA, a 1-minute trend break and retest, a channel touch, like I just showed you how it formed. The market always forms channels. I was doing one there on the 1 minute. It does it across all the time frames. One day I'll go through what a channel looks like on the hourly, then the half hour, 15-minute, 1 minute. So you can see how the pattern of the market radiates out across each time frame, how it's for, and how, because what you're looking for is those reversals, and they can sometimes be quite hard to spot, but it's when you get the reversal that you get the biggest pips. And then the last one is the 88.6 or 61.8 fib, a rejection of that. Those are our 2 favorites. People use all sorts of different fibs and have different favorites, but in this strategy, these are our 2 favorites. I'll find the one that's got the exit on as well, which basically just says the half.
Thank you. So we need to have a scan drawn on our trading view, and we need to have a pitchfork on that to start with.
Correct.
Okay. All right. Thank you. Yeah, it'd be lovely to see that checklist. Thank you.
Sarah, I have a question.
Yeah, sure.
I know. Minus makeup, and it's early in the morning, so
I gave up using makeup on my lives long ago. I thought, you know.
Oh dear. I have the hull indicator on my chart. I'm having an issue getting the bands on. I have the line, but I don't have the bands.
Okay.
I've obviously missed some. I mean, I've been on Sam and Chance's thing, and I've obviously missed it.
Okay, that's easy. You probably just need to check a box. Here's the hull. It's just loading. We'll just give it a minute to load. Just little circles turning. God, it's a bit slow.
I'm glad you're doing okay.
Yeah. So if I go to the settings, these are the bands at the back. So go to the settings. So on inputs, the enable code is 29 Forme. You want to check both these boxes. If I hadn't ticked that and I click OK, the bands at the back will disappear when it makes.
Okay, and then what happens when you do the colors? Because when I went on the next,
the bands have disappeared now.
Okay, because when you go onto this, is it the style, when you put the colors on, there's like 4 different boxes, and that confused me too.
Yeah. Okay. Mine's whole thing's just gone weird.
Sarah, I probably beat you on being the least technical person.
Well, it's an exclusive little club.
Thanks. It makes me feel better.
That's why I'm always not ashamed to admit it, because I really love trading and I find it very enjoyable. And when I try to remember back to how painful it was when new people come on board, and think just how overwhelming and how I was in tears and so frustrated and thought I'll never be able to do this. And yet I so desperately wanted it in my life. You know, I knew it was the route to freedom. And once I found out that actually that's what you're paying for, that all these tools do the heavy lifting, and it's about patterns and it's just about repetition, then it became very enjoyable. So I'm not ashamed to say I suffered, you know, a lot from anxiousness, feeling resistance about, oh, I can't do maths. But I mean, if you had to physically, I don't even have a calculator on my desk. Okay, I've got one on my phone. But if you physically said to me, work out a lot size and all that kind of thing, I couldn't do it. But I can use my FX book, because all I have to do is tick the buttons, you know. So, you know, it does it all for you, but in a way that you are using those tools from a position of understanding. And I think that is important, that you're not just doing it blindly. You know, you're understanding what you're doing and why. You just need to find the indicator again. There it is. Okay. I had to reload it. Oh no, it has come back up again. It went a bit weird.
I'm sorry.
Right. No, it's not your fault. So the enable code is 29 Forme. That's because it came from a guy that's no longer in the FX coach. I've forgotten his name now. Steve, someone or other.
Gregor.
That's it. Yes. So it's actually his. So unless you have that code, you won't be able to put it in. So the one where it says Hull MA1 length is the green and red line that goes through price. So it's showing you price on the 1 minute. You don't change any of these settings. And then to get the bands at the back, Hull MA2 length, which is the 15-minute band, on the bands show the price on the 15-minute time frame as bands in the background of red and green. You need to check that box. So I suspect you just haven't ticked that box.
Okay.
Because I've done that before, not tick the box and wonder why the bands haven't appeared.
Okay, now if you go onto style,
yeah, there's just one other thing that you have to do. where it says local for select time period, and here, so 2 other things you have to do. You want to change line to band.
Okay.
And then you want to change local to 15 minutes.
15 minutes, okay.
And then the other thing we sometimes do, I don't do it very often, is you can have a look at what price is doing on the 60 minutes. So if I'm thinking of getting into a trade, or I'm in a trade, say I'm in a buy and it's telling me it's green on the 15 minutes, and I'm thinking, am I staying in this or what? Because I can see whatever's, you know, things are leveling out. I might switch that to the 60 minute to see if it's going to give me the same thing over a 60-minute time frame. But I don't, but I always keep it on the 15 minutes.
15.
So for the Hull MA2 gives you the bands, and I need to change the colors because it comes up bright red like this. Tick the box, change line to band, and change local to the 15 minute.
Okay.
And then, yeah, what was your question on style?
Yeah. Which I wasn't sure which boxes to play around with.
Yeah, so the top, leave them all ticked. Oh, the top one, leave as bright red and bright green, because that's the 1 minute going through price as a thin line. There, you can see it appearing here, the thin line of green and red. And then these ones, keep them ticked. They're giving you the bands, which are, even for me, too bright to bear. So what I do is I go through the last 3 and I just change them to say, you change it to what you like, but I change them to a very pale, the same, I change them to a very pale red and a pale green. And I usually pick the 4th one up, because sometimes you have to reset it. It goes, some of these indicators can go a bit weird on you. That's that one, and that's the last one. So just change them to something a bit less glary, like that. So that's a bit better, because you don't. So you've got the price as the bright one, the 1 minute, and then the 15 minute will now appear like that, and then just press OK.
Thank you.
And then the other thing about the hull, like any indicator, it's what you call a lagging indicator. So when price changes, just change that. I wonder if I can change that. Change the thickness to show you. Yeah, I usually change this to the second one, second thick line. You can just see it a bit more clearly. So it's what you call a lagging indicator. So if you look here, it on the 1 minute it's changed to red. You might be in the trade here. It's changed to red, but it doesn't change to red on the 15 there. It's changed to red, and you're thinking, oh, should I get out of the trade? But because it's a lagging indicator, the line is on the 1 minute trend. It doesn't actually flip to the band where you should be, because what we say is 2 flips of the hull on the 1 minute, we'd be getting out of the trade. So it's a lagging indicator. Price is actually dropping before it flips to the red on the band. That's a lagging indicator. So 2 flips of the hull. I can't see any short flips, otherwise I'd show you 2 flips.
Yeah, could you explain that? What I know now you're going to try and find one to show me. But
yeah. Perhaps if we switch, shall I go to the? Perhaps if I can go further back. So if I was in this trade here for a buy, and it's got in the green, there's 1 flip to the red. So I'm not going to get out of the trade because I've only had 1 flip to the red. So I'm staying in the buy there. And then I've got a 2nd flip to the red. At that stage, I'm thinking I should get out of this trade. Sure enough, it comes up to test the 15-minute, that blue line, the 15-minute moving average, which is a rolling line of support and resistance. And then you can see a big drop down. So, so that's how we use the hull to get out of a trade. I was, there's a break and a retest. I mean, it hasn't, in fact, it has done a touch, a pitchfork touch there. I've got in for the buy. How many pips is that? Oh, it's 86. It's quite a lot. So it flips red there. I don't get out. It's still above the 62, but I'm thinking, oh, 2 flips of the hull, I'm out. There's my 2nd flip. I'm out the trade there. It comes up, tests the 15-minute, but then you get the big drop down. So 2 flips of the hull, I'm out. I'm not sorry if it comes up, test there, and I've lost a few pips, because generally I've made whatever it said, 80 pips, which is a lot, although on this, the 62 is under the 15-minute. It hasn't crossed, but I don't know, I probably would have been in that trade, except it's on the way. Where's my, just have to put the scanner back on. C to D, C to D. So I wouldn't have been in that for a buy, because for me, I only take off the D point, or where it's, oh no, it has come up. It's come up. Sorry, it's come up from that way. Come up from that way. A bit disoriented doing it like this. Yeah, this is catching. Yeah, that's why I'm looking at it the wrong way around. So it's come down off the C point to form our new scan, and I wouldn't probably have been in this trade at this stage, although I could have been before the scan formed, because I could have been taking it off this old green pitchfork. I would have been taking it off there, so that's okay. Yes, there's pitchfork touch. It's above the 62. I've got my confirmation, so it does apply. So 2 flips of the hull and I'm out. Okay, and then although I've missed a few pips there, I'm not bothered, because it's the same height as where I've got out the trade, or I've missed a bit of it. But then sure enough, there's the downward plunge off that, and we're just coming up to time, so I won't look at any more probably today, unless anyone's got any other questions.
Thank you, Sarah.
Thank you, Sarah. That was really interesting.
Yeah, you're very welcome, because we've got Sharon coming on next. So I don't want to hold anyone up for that. And you've got plenty of pips in the market at the moment to be looking at. So I hope you've all been having a good week. So I'm going to stop sharing. Tidy this up before we go.
Thanks, Sarah.
Thank you, Sarah.
You're very welcome.
I can't remember, do you do Fridays, Sarah?
No, I don't do Fridays, because it's New York session after lunch.
Yeah.
So tried it once or twice, and it's not good time. So I'm finished trading Friday morning, and actually most of the time now I don't trade at all on a Friday. I tend to do I had been doing housework and getting ready for the apartments for the weekend, but that's off at the moment. But no, it's not, not good. I think Sharon stopped as well. She doesn't do Friday afternoons either. Okay, so I'll leave you all to get on to Sharon's. Yeah.
Thank you. Have a good weekend.
You too. Bye.
Thank you, Sarah.
Bye.
Thank you. Bye-bye.
Thank you, Sarah. Thanks a lot.
Bye.